All right, let's talk about Tom DeMark. He is joining us. A lot of you have been writing and saying, what does Tom DeMark think about the markets? There he is. Tom, it's great to have you on the show. You advise some of the biggest guys in the business, Steve Cohen, George Soros, et cetera, et cetera. Let's talk about today's action. What do you think of today's action, first of all?
Today's action is creditable. I mean, given what the market did last Thursday and Friday, it took a rest, and I think that today was a good job for the market. There was some risk that it could move lower, but like I said, fortunately the buyers came in after a weekend, and that's usually a pretty good sign. Deliberate thinking or deliberation over the weekend is a positive, and usually you get the direction of the market for the week on Monday morning.
Now, you've made the point that where we are right now, 1257 roughly on the S&P futures is an important area. Why is that?
Well, if you recall, on May 2nd, we turned very negative because the daily, monthly, and weekly indicators all had indicated downside risk. August 9th, we turned positive in one respect, but we've turned very positive at the October 4th low. We were looking for 1076 on the downside all the way down, and we accomplished that. And then subsequent to that low, we wanted to see the direction of the market and the velocity off that low. If the market had moved too quickly in 3 or 4 days and accomplished 1188 to 1194, we would have expressed some concern and looked for the market to resume its decline. It took 4 to 5 days, closer to 6 days, to realize that upside. And once it did that, we quickly revised our upside to 1254, 1257. And as you're aware, the market, the day it hit 1254 to 1257, that was the actual high of the day of the market. And from there, we looked for the potential of a bull market or a bull rate on the market for those who are bullish. We look for them to be caught, and that's exactly what happened. We had a downside price objective of 1150, and that was arrived at about 3 or 4 different ways. One was a retracement, another was a trend factor calculation, excuse me, and then a trend line break projection.
Well,
they all converged at 1150.
We actually put a chart together for our viewers because you absolutely nailed it. And I want to just bring this chart up for the benefit of our viewers. You nailed the sell that was back in April. All right, that's that red arrow there. And then there were subsequently 3 buys. That's what you're talking about. A buy in August, a buy in early October, and most recently that Thanksgiving buy, that far right arrow on the screen. And I guess you make the comment, we're now going up to 1257. All right, you think we're going through it, and you have a target of 1330 to 1340. Can you lay out the case of how you sort of see us going from where we are today to that 1330 or 1340 target?
Sure, happy to do so. Off the August 9th low, we had 11.2% rally. We were looking for 1230 on the S&P cash. And then once we've accomplished that, we look for a 1076 to be hit downside, and the market did decline we did decline 11.2% off the high day's close. Then on the next thrust of the upside off that October 4th low, we were looking for 1254 to 1257, and that's what was accomplished. And once again, we looked for a decline of 11.2%, and that gave us 1150. Well, what happened the Wednesday before Thanksgiving as well as the day after Thanksgiving, we got some of the most positive readings ever recorded on our short-term indicators. And that set off a lot of alerts. Together with that trend line projection of 1150, we made the presumption, and the expectation that the market would record a steep rally. And typically, the Wednesday and Friday before the Thanksgiving week are very positively inclined. And we didn't see that positive movement either day. And we had a semi-holiday weekend, and usually what happens over semi-holiday weekends or holiday weekends is news is expected, and that's what happened from the European markets. And as a result, the market exploded last Monday. Now, if one were to take that 11.2% but add an additional 5.56%, because that's basically what we're using, our multiples of 5.56%, we'll arrive at the 1330 to 1345 projection upside. What did happen in the decline that we recorded from the August 31st peak into the October 4th low, as well as from the October 27th peak into the November 25th low, they consumed 20 to 22 days, those two declines. The rallies prior to those peaks were 17 trading days. If you take 17 trading days and add it to the November 25th low, will arrive at December 21st as being our expected high. And coincident with that high, we should accomplish the 1330 to 1345 projection.
Well, as a matter of fact, Tom, you just said more importantly. I'm not going to interrupt you. What were you just going to say?
Well, we have two indicators that we've used and applied to the market for close to 40 years. And one is called sequential and one is called combo. Sequential and combo both spoke very loud and clear on May 2nd on daily, weekly, and monthly basis. And then on August 9th, it was a solo 13 on sequential and combo on a daily basis, and the same thing on October 4th. So we're really operating against the overall trend, which is down. But in the context of the overall trend being down, we have a dual 13s, and that typically responds with an offsetting 13. And currently, sequential and combo are either 7 or 8, and they're both awaiting the close of 1282.60 on the high that was recorded on November peak.
In other words, Tom, I'm going to bring the chart up. If we could just bring the chart up. We were just looking, there were 17 days. So in other words, Tom, we're going to see follow-through, according to your models, that lasts another 17 days. That's why we get to December 21st. And at that point, we'll arrive somewhere between 1330, 1340. And then you say, given that we're in an overall sell pattern, we go back down. Is that right?
Yeah, the decline should resume. The bias is definitely to the upside seasonally because it's December, plus the coincidence of all those short-term models that we use that spoke loud and clear Wednesday and Friday of Thanksgiving week, as well as the 13 duals on August 9th and October 4th. There's enough impetus given all those indications.
All right,
yes,
Tom
sir.
DeMark. I wish we could keep going, Tom. I apologize for cutting you off. We've got to, unfortunately, take a break. The computer mandates that one. So Tom DeMark, CEO and founder of Market Studies. Tom, thanks for joining us.